What does non-farm productivity increases permit you to do? It gives the Fed a lot more leeway to make money available without having to fear inflation. But of course, that's another way of saying that that gives them the opportunity to vastly increase the supply of money available. Well, to some extent, price is, after all, a matter of supply and demand. I know there's velocity, but supply and demand means if you have more supply, well, obviously, if you have the same demand, you would expect the price to fall, or in other words, the dollar to get weaker. Will the dollar get weaker in this particular non-farm payrolls report? And the answer is, well, that seems likely. But can I point one thing out before we assume that the normal rules apply in this particular area? Yesterday, the European Central Bank refused to cut its rates further for the moment. Now, Trichet did come out and say that there was the possibility that they would, in fact, cut by half a point come March. In contrast, the Bank of England cut its rates to 1%, an even newer low, the lowest it's ever been in its 315-year history. That is a very significant cut. Well, basically, you would expect in that scenario that the euro would strengthen and the pound would drop because, after all, the interest rate differential has just decreased. That should get weaker when the interest rate goes down. And most of the time, in ordinary times, that is the case. Instead, the euro essentially stayed the same and the pound got stronger. The exact opposite of what you would have expected in that scenario. Remember, with the European Central Bank saying they're not dropping interest rates, maybe they could drop them a little bit somewhat later. They do not anticipate dropping them down to the levels of the U.S. or Japan. That should be euro strengthening. Instead, euro has essentially been flat. I've been going back and forth, but essentially flat. 5-minute chart, you can eat. No real significant change after the European Central Bank announcement. Just sort of moved around the same general area it's been in. Okay? In contrast, British pound is the currency we're going to be looking at. Look what happened there. Going up. And in fact, it accelerated that upward movement after the Bank of England's announcement. It accelerated its movement upward. Okay? So here you are. This is a big difference. Okay? Why would this be, why is this the right call by the market? This is not irrational behavior. Well, because the actions, or rather inactions, of the European Central Bank basically tell us that they are caught in a policy vice where they are not going to be able to act as flexibly. They're not going to be able to do as much for their underlying economy as the Bank of England is, or for that matter, the Federal Open Market Committee, the Bank of Canada, the Royal Bank of Australia, etc. Because the northern nations of the European Union are so afraid of the apparent profligacy, you might say, of Spain, Italy, Portugal, France. In other words, the southern nations. They're not willing to drop their interest rates lower if they can help it, because if they do, they're afraid that those countries will, borrow like nobody's business and spend like drunken sailors. Okay? When you're caught in that kind of vice of fear, that means that you're signaling, as you're reacting to that particular fear, you're signaling that you're not going to be able to do as much for your economy as the other guys are going to be able to do for them. Of course, obviously, we've seen, German industrial production is going down, etc. Well, that's basically another way of signaling that whatever investments you might make in Europe, so why would you send your money there? And of course, logically, that means then that the euro is not going to strengthen, since there's no real incentive to go rushing in there at the moment, is there? Just because the interest rate is staying the same, that's not enough oven by itself to move the market. And especially when the underlying message is that overall, profits, return on investment, and so forth are likely to decline anyway due to the actions of the bank. Well, here we are on the pound. We're about up to the non-farm payrolls. As I said, if there's going to be a surprise versus, the consensus, it's most likely to be a surprise, unfortunately, in the form of a higher number. So we're about ready to have the announcement. I've given you a lot of background information. For those of you who do trade the Canadian dollar, you might especially be wanting to watch it this morning, and we're about ready to go. So let's wait and see the announcement come out. Okay, well, the good news is at least it wasn't 3 times bigger than expected. Bad news is what we expected was about 540,000, at least at the beginning of the week. So it certainly is worse than was originally predicted by the consensus of most of the economists out there.